Today on the program, our conversation is going to be on some aspects of the economy, particularly on the inflation rate. You know, on the 13th of February, the National Bureau of Statistics released its consumer price inflation for the month of January, and it was unchanged at 8%. Well, I'm being joined on the program by two financial analysts from Financial Derivatives Company Limited to take a look at this number, especially since they also brought us a report as regards what the figure was going to be like. I'm being joined on the program by Damilola Akimbami and Ralph Yemiton. Thank you so much for joining me this morning.
Good morning.
Well, let's just start. You know, we already know that it was unchanged at 8%. Did this come as a surprise? Because, you know, according to the report from Financial Derivatives Company, it was almost expected.
Yes, it was, like you said, it actually didn't come as a surprise to us, and most analysts actually expected that the trend would remain the same in January, and that was because looking at the trend in food prices were basically just around the same thing, and the core index also, which is the non-food index, there was just a marginal change in that also, so it wasn't a surprise at all.
Yeah, but you see, the report indicates that there was low inflation rate of 8%. It did not take the market by surprise because of the usual time lag between money supply increase and exchange rate pressure on consumer prices. Could you just throw more light on this, Ralph?
Yeah, usually when there is excess liquidity in the system, it takes a time frame before we start seeing the effect of the excess liquidity on consumer prices. Okay. So, money supply went up in December from 14 trillion naira to about 15 trillion naira in December. So that is not we didn't expect the impact of that immediately in January. So we are likely to see that impact later on in March.
In March. Okay, because you know there was also speculation that probably at that time inflation rate might drop to something around 6.86% or thereabouts, or could that be off?
No, that's definitely off. We weren't expecting inflation to decline that low. We weren't expecting. I know December usually is the period where people spend a lot because of the festivities and all that, and January you would have spent most of your money and you want to relax a little bit and all. So that's why we said that the trend was expected, and like you mentioned, the money supply, the time lag is usually like 2 to 3 months. So yes, like you mentioned, I know there was an AMCON redemption of about 1 trillion. So that obviously hasn't taken effect. We see that happening in the next couple of months.
Now, what about the increase in the CRR? Wasn't that also factored into what will most likely happen in terms of the inflation rate rising?
But the increase in the CRR was actually more of, apart from targeting liquidity in the system, was actually more of an exchange rate management. I know of late the CBN governor also reiterated the fact that it's out there to defend the naira, and there's a high possibility that they might tighten further in the next meeting.
Yeah, because we noticed that yesterday it offered as much as $600 million to boost the naira.
The highest year to date, at least this year. Yeah.
And is that most likely going to continue?
Oh, well, it depends on the trend that we're going to see in the next couple of weeks. The pressure is out there, and that's because of speculative activities. People are nervous. There's a lot of uncertainty as to what is going to happen. Nobody knows whether naira is going to depreciate by this amount or that amount, but we all know that yes, it's going to depreciate. So we rather buy your dollars now when it's at a particular rate than when it depreciates further. So there's a lot of uncertainty, and also issues occurring globally are also stoking that pressure. We're seeing a lot of capital outflows because of the US tapering and all. Our reserves are depleting, so there's a lot of uncertainty.
Is that uncertainty the reason why we seem to be seeing a widening gap between the CBN official rate and the parallel market these days?
Well, if we look at the parallel market actually has converged a little bit, has appreciated. At least from December, it felt as low as 176, but now it's back up to 171. So we're actually seeing a little bit of appreciation at the parallel market. But then the demand is still, because the CBN removed the limits of the forex sale to BDC, so that has increased demand pressure at the official and the interbank market. So whereas there's more supply to the parallel market, there's increased demand at the interbank and official. So that's why we're seeing more of the pressure there than others. So there's a convergence in rates.
Well, let's still go back to this talk about inflation. By March 17th, the National Bureau of Statistics will release the February inflation rate, and FDC is forecasting that inflation rate will drop marginally to about 7.95%. Why?
Yeah, the 7.95% actually estimation for February.
Okay.
So in March, we have a band. We don't have a specific because of the things that we expect to come in March. Well, one of the most important one is actually the impact of the new auto policy.
Okay.
You know, when the new auto policy finally kicks in, then we're likely to see manufacturers change rates of the cost on their vehicles, because on average about 50% has gone on their tariff. Import tariff on these vehicles. So a vehicle that cost about 4 million naira last year would now be costing about 5.6 million naira.
But you see, that doesn't, looking at what the Minister of Trade and Investment has been trying to promote as much as possible with the new policy when it came out, we had this, we had companies like Nissan, Peugeot, and the rest of them wanting to make incursions into the manufacturing sector to begin to produce cars. And so it almost seems as if it doesn't totally add up. He says the cost of cars are supposed to reduce, and it seems as if your analysis makes it look like the cost of cars is going to increase.
Yes. On the long run, the cost of cars will come down. But in the short term, when we see the policy kicking off, and we still have these manufacturers in the process of starting their manufacturing and all of that, other companies will still bring in vehicles. Even the companies that are planning to manufacture in Nigeria will still bring in vehicles. And once they keep bringing in these vehicles, they will have to pay the new duty. So we factored in at least 50% on their cost of import.
Okay.
And by calculation, they are likely to transmit their excess costs onto the consumers. So which will go to about 30% of what they currently get. Now, this in turn will affect transportation costs, because we are likely to see more buyers, the people into the people that are companies that are into transportation, especially the rental companies.
Yeah.
They are likely to push up their prices because they cannot bear the whole cost of this new policy. So we are likely to see more of the impact on inflation in the near term, while in the long term the cost of transport may likely come back down. Okay, so
what are we expecting also? How are we expecting this as well to affect the importation of Tokumbo cars, used cars?
Oh, okay.
Okay, in the same vein, the new auto policy has guidelines for importation of
used cars.
But the idea of the policy is to discourage importation outrightly.
Okay.
So when people start seeing that cost of vehicles have gone up, they would rather wait for the new vehicles that will be manufactured here to come out.
Okay.
However, for those who are ready to buy the new vehicles, they are going to have to pay for the cost of the new cost of vehicles.
Well, still talking about the forecast inflation rate for February. Some are anticipating that it will fall as much as 6.86%, and I actually said, and you're saying it's not likely. Why isn't it likely? In light of what we're seeing and what we're expecting to happen in the short term, like Ralph just said.
Yeah. Like we've mentioned at least the automotive policy,
yes,
which is actually a key factor, because aside from all that I has discussed, the transportation sector has linkages to other sectors. Once transport costs increase, the next thing you hear is that food prices increase and cost of clothing and other things increase, like what happened within 2012 when the subsidy was partly removed. Now, aside of the automotive policy, there's also the gas policy. Gas prices were actually increased by 50%. So now the power or the input to actually generate these power gen codes and discos has increased, and if the cost of input increases, obviously that will translate into other things. The next thing you see is that most likely the multi-year tariff would actually be increased, meaning higher electricity costs. Okay. That's also another factor that we're looking at that's going to stoke inflation in March. And also I mentioned money supply area, that the time lag between when a policy is implemented and when it's impacted on the markets, like 2 to 3 months. In December, the AMCON bonds were redeemed 1 trillion, so we expect that to hit the market around March. So these factors, amongst others, we expect to influence inflation. I know we're entering, even looking at the food aspect, we're entering the planting season, and generally when there's a planting season, you have less supply, and you see prices of food items increase. So all this put together, we expect inflation to actually increase.
Okay, what about the monetary policy aspects of it? How do you expect it to
exactly
affect it as well?
We're anticipating an increase in inflation, right? So obviously, if there are inflationary pressures, this will undermine monetary policy. The CBN would obviously want to react or do something to curb this.
Already, we know that the CBN governor is saying that the MPC is considering increasing CI to 100%.
Exactly.
So that's on public deposits funds now.
And 20% on private.
On private, okay. So now, what in the eventuality will happen if, for instance, NPR still stays at 12%? What happens?
Oh well, we are of the opinion that it's a temporary relief program. Let me use that word. Yes, because fine, it would have an initial impact. Your interest rates would go up, borrowing costs would grow up, net margin would thin out and all that. But then, like I said, it's temporary. What happens after 6 to 8 weeks? What happens next? TRR was increased, at least for public sectors, in January. Now, interest rates are back to pre-crisis level of 10.25, 10.5%. So that was a temporary solution. So what we're of the opinion that it will get to a point where the CBN might have to actually embark on more drastic approach or solutions, like, for instance, allowing the currency to weaken, because they said that it's going to continue to defend the naira, but not at the cost of hemorrhaging the reserves. So at what point is the CBN going to make this decision, and by how much would they allow the naira to depreciate? That's actually the key question.
Okay, so Ralph, let me just quickly take you through some of those points we're seeing on our screen there. You already mentioned the transport fares are going to increase. The MPC might be forced to increase the cash reserve requirement and push interest rates up by 400 to 500 basis points, and naira pressure will continue. And importers of cars will lay off staff.
Yes, because they will lay off staff basically because if their cost of imports is going up, they can't transfer the entire increase based on the policy onto the consumers. So what they need to do is look inwards and try to downsize. So that's the most important part of the whole thing.
That's a very big threat, because you see that means the amount of unemployed is going to increase from the current number that we have.
Yes.
Even though the automotive policy is supposed to encourage as much as possible more job creation and the rest of it.
It's the likely scenario. I'm not saying it's going to happen. It's just one of the possible outcomes, because obviously with increased cost, as a business person, you have to go back to the drawing table and find where can I cut costs. Will I cut costs by transferring this to the end user, or will I have to look inward and downsize or reshuffle? So it's one of the things that could possibly happen.